Hello everybody. So today we're going to look at milestone 3. We're just going to look at the statement of cost of goods sold. So you're going to definitely need to have this appendix, this milestone 3 actual cost and revenue data appendix. You're going to need that information. The project workbook you probably already have, but it's provided for your convenience. Alright, so let's go ahead and look at that. Alright, so here's the statement of cost of goods sold. There's not a lot of stuff going on here for you to fill in. But it is an important statement because it tells you how much the cost of your goods were that were sold. And so let's just look at the income statement real quick. We're not working on the income statement today, but you can see that it's needed to do the profitability of the company. Cost of goods sold is an important element. If you take the revenue that you earn from selling the harnesses, collars, and leashes, and then you subtract from it how much it costs to make those, then you get your gross profit, and then after you subtract the rest of your expenses, you can figure out the profitability of your company. So it's pretty important that we get the cost of goods sold. The cost of goods sold, we're going to take the beginning materials, add to it any materials we bought, and then subtract any leftover materials. And that way we'll know what was used in the manufacture of the collars. So the beginning materials and work in process are zero because it's a new company. Work in process means partially built collars, leashes, and harnesses. But since it's a brand new company, there were no partially built collars in the beginning because it was brand new. Everything was started from scratch. The materials at the beginning were zero because it's a brand new company. But then you added purchases, in other words, purchases of materials that you're going to need during the period. So that's provided for you. As you can see here on the information that's provided in that data appendix, here's the information for the cost of goods sold. It tells you the materials purchased, consumed, direct labor, and overhead cost. And it says assume the beginning and ending work in processes are zeros. Materials purchased, that was provided. Then if you add up these other two, and remember you have to use calculations to do this, or show your calculations in order to get full credit. And then you deduct your ending materials. So since 80% of your materials were used up, then 20% is going to be ending. And so then you get your materials used. So you take your materials available for use minus your ending materials, and that's going to give you what was used. Make sure again you use your calculations here. Then you add your direct labor and overhead, which we saw was provided, and that gives you your total cost. So you're taking materials used, direct labor, and overhead to get your total cost. They said to assume that this was zero. And so then you get your cost of goods sold, which is going to be the same as your total cost. Then that information is what's going to flow through into your income statement. We'll see that in the next video.